Hi, and welcome back to the Global Treasurer's Future in Focus series in partnership with Standard Chartered. My name is Rajiv Guru, Senior Reporter for Infinite Intelligence. In this episode, we will be looking at some of the biggest Treasury trends of 2022 and reflect on whether we are likely to see this continue over the next 12 months. We will touch on the importance of ESG for treasurers, the impact of cross border payments, as well as recent supply chain disruptions. To provide insight on these topics, I am pleased to welcome Karen Home, Managing Director of Transaction Banking at Standard Chartered. Welcome, Karen.
Hi, Rajiv.
Hi, I'd like to start by asking what do you think the biggest treasury trends of 2023 will be?
Our clients speak to us about the top three treasury trends to watch this year include monetizing working capital faster, focusing on cash, and lastly, focusing on automation and digitization. Let's start with working capital. It's in general taking a lot longer to convert inventory into cash. They have higher inventory levels. Supply chain disruptions remain a factor on that and is expected to continue. Volatile markets, political tension, unstable FX rates. Overall, it creates a difficult environment for our treasurers to do cash forecasting as they're looking at their working capital cycle. So the second trend in terms of focusing on cash on hand, not only is it important for funding their business, but also borrowing is becoming increasingly more expensive. They have recession fears in the US and Europe. The strong US dollar is impacting their non-US dollar revenues from overseas business. However, despite this external environment, the recent relaxation of COVID-19 restrictions in China provides huge grounds for optimism in 2023. Overall, Asia is going to be the fastest growing region in the world, and the significant reopening of the Chinese economy is likely to materially boost demand and growth. Lastly, in terms of digitization and a focus on automation, this not only includes payment hubs, but also investment in treasury systems. The importance of treasury technology to provide automation and efficiency to automatically consolidate data from various sources remains a key consideration. In this environment, speed and agility are key, driving treasurers to look for new approaches and cross-border payments to also reduce the number of inventory days. Lastly, in general, we see a continued rise in the importance of the Treasury Department. They are giving the most on the ground outlook for their C-suite in terms of market trends and overall working capital management.
Brilliant. You've highlighted some challenges there, but you've also focused on perhaps an optimism outlook. Would it be fair to say the outlook seems positive?
We see the global growth outlook to be positive. It may be challenging in the US and Europe, but we definitely see the big manufacturing centers in Asia helping to make up for that.
Brilliant. Um, One of the trending topics across the industry has been ESG in 2022, and we've seen more treasury teams focus on the topic. Do you foresee this trend continuing into 2023? And if so, what should sustainability mean for treasurers in the year ahead?
Definitely, the sustainability agenda continues to gather pace as the world faces significant climate and environmental challenges. There's an imperative to invest, find solutions, and support a just transition to net zero. It's never been more important. Many of our companies have publicly declared the sustainability agenda and have significant pressure to demonstrate short and medium term targets to meet their aspirational goals. Oftentimes, this has included appointing a chief sustainability office and developing a green and sustainable product framework. I would add to this that in the resourcing constraints that we're going through over since the pandemic, having diverse teams and keeping the resourcing side is also become part of a sustainable agenda. At Standard Chartered, we've been committed to attaining net zero in our financial emissions by 2050 by supporting a just transition. And this is important to us in our markets because we have many markets that we don't want to let them go as we transition to the sustainable agenda. We need to make sure that they continue to grow and prosper to help us all in the future.
So, when we talk about ESG, there's of course lots of different regulations coming in. And in the US, policymakers are considering implementing new sustainability reporting requirements. What impact do you think this will have on the Treasury functions?
Definitely, from a monitoring point of view, our Treasury functions face more pressure as those targets get put into things like the revolving credit facilities. They need to find metrics to monitor it and report on it. This overall environmental targets, as they become more embedded in global business models, will increase the pressure to set aspirational goals. But also, we're seeing it can mean that they have to apply more restrictions on financing to sensitive sectors. Shareholders' expectations around fair and balanced disclosures have been important with the scrutiny on greenwashing. This has accelerated various regulatory departments and developments as everyone is trying to make sure that greenwashing does not come into their agenda.
And if I take the focus back into Standard Charter, how are you preparing for this implementation of the reporting requirements?
We've definitely done many of the things I've mentioned in terms of appointing a chief sustainability office. In our lending, we have dedicated a portion of our lending to sustainable projects. We've developed not only lending products, but also asset products to help our clients meet these financial targets. We remain committed to building sustainable fuel sources and helping our clients around the world to become more and more sustainable and protect the environment.
Brilliant. I want to shift the conversation away from ESG and focus on I guess, one of the bigger challenges, or equally big challenge, which would be the recession, which might potentially be what the Treasury teams will be facing this year. Are there any areas treasurers could better utilize technology to help them navigate this economic uncertainty?
We're seeing a number of projects from that our corporates are investing in these important times. The investment in treasury systems that can help reduce any manual processing has become more and more of a focus. It requires a huge investment, lots of project hours, and coordination with the banks. So many of our companies are speaking to us about projects to help them not only with reporting, but also with being more digitized in the way that they're sending payments or receiving collections. It's actually a really exciting time for us in banking. We've significantly accelerated the ability to digitize what used to be a highly paper-based process. Definitely, it depends on what market you're in, how much focus the government has on making the local environment more competitive in this space. But it has been an exciting time. We look for more and more development. At the end of the day, what the treasurers need is to have the cash be converted as soon as possible. So they want their collections to come in instantaneously, and they want to be able to control their payables and lengthen out those terms where possible. Having that data on hand really gives them the tools they need to better protect their business. And the coordination that they have with their international teams and their global marketing growth teams has never been more important.
Hmm. Fair enough. And could you perhaps give an example how within Standard Chartered you've leveraged the technology to, or how you have sourced technology providers to better provide digital solutions to your clients?
We have definitely been partnering with more and more fintechs to collaborate together on providing these types of solutions for our clients, both on the cash side as well on the trade side. Specifically on the cash side, we're working with local governments to add on features such as fast payments or local ACH payments, bank transfers, to make our customers more efficient. So one example is when our clients are looking for online ability to pay for the goods and services that they purchase. They want to have more than a credit card option. They often use digital payments in their retail life, and they'd like to be able to use that when they're paying to their corporates. So we have embedded ourselves along with fintech providers into their online portals, and become a key player, whether it's white labeled or you see Standard Chartered. The customer knows that they're able to have the same options available in paying their corporates as they do in their daily life. It's an exciting time, and we look for continued growth in this area.
Brilliant. And the other challenges that has been, I guess, haunting the market has been the supply chain disruptions, and it has the potential to cost billions to the GDP this year alone. The pandemic and the current geopolitical situation have only compounded to these existing issues within supply chain, such as the lengthy cross-border payment cycles. So, what do you think treasurers can do to mitigate these challenges?
We have seen a number of strategies from companies to help mitigate these challenges. The most expensive option is building manufacturing facilities closer. Instead of having a global supply chain, you have a more regional supply chain. That takes time. So it's definitely becoming more and more an investment that companies are making. But in the meantime, how do they deal with their supply chain? So going back to the beginning of the conversation in terms of keeping cash on hand, being able to finance inventory that's taking longer to turn into product has definitely been important for treasurers. One thing specifically that they can do is to look at automating and making their cross-border payments more efficient. That has been a source of friction for many, many years, and our clients don't often have the information they need to reconcile their accounts when they don't have visibility onto foreign exchange fees, as well as lifting fees as the cross-border payments are sent throughout the world. So one thing that we're very excited on working with is fintechs, again, working in the fintech space to help provide that technology in all payments so that it's very clear where deductions are being taken. And then our clients can ask their banks and their fintechs to work together to minimize any friction costs. The more and more, the more they're able to control their cross-border payments, that will help speed up the time to market for their cash conversion cycle. Supply chain disruption is likely to continue this year, so finding areas that can help them minimize the stress will be really important.
Great. So the volume of cross-border transactions has increased exponentially. Some reports indicate that the cross-border payments is going to increase to over 250 trillion by 2027. So how should Treasury teams continue to leverage technology to remain at the forefront of payment innovation?
The most important piece of information that our treasurers can have to manage their business is a visibility on their payments. They need to know as soon as they're collecting a payment, when it's been received. They need to have full payment data on that payment. Wasn't always being provided before. Having those two keys helps them manage their business, their cash forecasting, and project cash on hand that they'll need in markets going forward. The cross-border payments area continues to get scrutiny as there's regulations coming in terms of that data of information. So that should help them as well. So it's a combination of what the industry is doing as well as what treasurers can do to make sure that they have the systems on hand that can absorb that information. Perhaps they can build APIs with their banking partners to get that information as quickly as possible. But most importantly, that will help them as they look forward on their cash forecasting and how they manage their working capital to have all that information on hand just as quickly as possible.
Fair enough. You mentioned there are regulations coming in to help the treasurers to manage, to help with this with the cross-border payments. What sort of regulations are we talking about here? Could you elaborate on that?
The most important one is the availability of information. So disclosure of FX rates that are being charged, as well as lifting fees that are being charged by intermediary banks. There are also regulations, especially in markets like Europe, that minimize the amount of deductions that can be taken along the chain. All of these will help make the process smoother, provide less friction, and have a greater cash. If you're expecting $100 and you get $75 and you don't know how to reconcile it, your staff is going to spend a long time looking for that, and your forecasts are going to be impacted. So it is very simple state. The more that the regulations can help enforce the need to provide the information and minimize lifting fees along the way will significantly change the ability to keep cash. Secondly, I would add that from a digitization point of view, the regulators might not be mandating it, but the more that they can get paper out of the system and reduce the reliance on checks, for example, even at a government level, accepting customs or tax payments via check, if they insist on a digital payment flow, it helps everything run much more smoothly without the delays that we're going to continue to see on a paper-based system.
Brilliant. So overall, as you mentioned in the beginning, the Treasury industry has a positive outlook, and with the different regulations helping the clients in general navigate through the challenges, and also the technology will play a key role in ensuring that they remain on track to capture the opportunities that are available. Thank you very much for your insight, Karen. It has been a wonderful conversation with you, and thank you everyone for watching the video. Take care.
Thank you.